Welcome everyone to our regular Friday lunchtime webinar. My name is Tim McGowan, I'm your host. We've got the same format today, 10 minutes presentation with 5 minutes for Q&A. If you'd like to ask a question, just type it in the green box. I'm not sure whether we'll have time to get through to every question today. We have over 700 registrations, so thank you all for your time. Obviously, the smaller micro-cap end of the market is running red hot at the moment, which from my experience is also an opportunity, but it's also a time for caution. I've seen a lot of the chat on some of these Facebook groups, and perhaps that's a bit of a worry. So the purpose of these webinars is to introduce investors, new investors, experienced investors to the business models of the companies presenting today. We want you to become an informed investor rather than a speculator. First up today, we have Novonix, what is it? NVX, ASX code NVX, with a market cap of 418 million. The company has been in the press lately. It is a maker of battery technology for electric vehicles and energy storage systems, and there is a lot of interest in this company. It has a very astute top 10 list of shareholders. It's been in the spotlight this week. There's been some news around a American listing, an OTC listing. It had a capital raising back in June 30, which was well supported by existing shareholders. And of course, the talk is around this September 15 Tesla Battery Day, a day where supposedly new partnerships are introduced. We have with us Chris Burns, who is the Chief Operating Officer. Chris, over to you. Thank you.
Great, thanks, Tim, and happy to be here to talk to you guys today. As Tim said, Novonix is a company focused on battery materials and innovation, really to support the growth in the electric vehicle and energy storage system market. So my background very quickly before I jump into the company. I've been in the battery materials space for about 10 years, a little over 10 years, working on technologies to advance battery lifetime, new material synthesis methods, evaluation, all in the vein of how to build long life batteries at lower costs. In addition to working for Novonix, founding one of the business units now that I'll speak about briefly, I also spent 2 years working at Tesla, leading a team around materials evaluation, before coming back in 2017 and running the groups within Novonix to date. So if we look at the first slide, it'll go through the company structure. If we want to hop forward one, thanks. So we're listed under the NVX ticker, as Tim said. We currently have an application lodged to have a listing in North America on the OTC market. That is just awaiting our audited financials from this fiscal year that just closed, which should finish by September. But really the listed vehicle is essentially a holding company which contains our two and now third operating company within it, which are all North American based. The first of which is our Novonix Battery Technology Solution Company. This was the business I founded back in 2013. Really focused on R&D technologies to help enable new innovation in the battery materials and battery sector. We work closely with the university on new materials partnerships. We have full cell building capability to evaluate our materials, and we design and sell equipment for battery lifetime evaluation to all the major cell manufacturers, many auto OEMs, consumer electronics OEMs. So we work with many relevant industry players around how they look at battery evaluation. That group really supports our technology development in new materials, as well as supporting our research and development and battery materials evaluation within our pure graphite business. So in the middle there, our pure graphite business is focused on synthetic graphite material, which I'll speak a little bit more about. This is really our first commercial opportunity that's spun out of our research ecosystem. We're at a stage now where we've gone through our product development internally and started to go into the commercialization phase. We have a conditional sales agreement in place with Samsung SDI to start delivering material to them later this year, as well as an MOU in place with Sanyo, which is the cell building division of Panasonic, to further evaluate our production samples after positive pilot line results. And some of the recent announcements, if you've been following the company, are around our new cathode technologies. So within our battery technology solution group, we've patented new processing technologies to make dry synthesis cathode materials, which can lead to lower cost materials with the same performance or potentially even higher performance than what's in the market today. So this is really where our company focuses, is developing technologies to support long life battery materials at lower costs. And if you look at the next slide, it's really showing why this is a relevant market to be in right now. The growth in battery demand over the course of this decade is going to be huge, and most of that is on the back of electric vehicles and energy storage systems. So consumer electronics will continue to grow, but the battery usage in something like a laptop compared to a vehicle is so minute that the materials that are needed for vehicles and energy storage are really what are going to drive demand over the course of this decade. And that market's supposed to grow by about a factor of 10. So between the anode graphite market and the cathode market, it's about 10 billion US dollar market today, growing to 50 to 100 billion over the course of the next 5 to 10 years. And the demand on those materials is high performance and low cost. And that's really where all of our innovation is focused. And our businesses are based in North America. And if you look at the next slide, you know, we're finally starting to see growth in battery manufacturing happening outside of Asia. So historically, China has really had a stranglehold on battery manufacturing. It's become incredibly apparent over the last number of years, the dependency of the market on Chinese production. And so finally, you're starting to see major announcements. And of course, Tesla's factory in Nevada, which has been operating for a number of years now, was really the first demonstration of battery manufacturing outside of Asia. And now you see about 130 gigawatt hours of projected capacity to come online in the United States. And Tesla actually just, through their investor call yesterday, talked about their new factory that they'll be building in Austin, Texas, which is not even included in these numbers. And Europe similarly is growing significantly. And so there's a demand now for batteries to be built outside of Asia, which require the materials to also not be dependent on Chinese and Asian sources. So if you look at the next slide, these new battery factories are all supporting vehicles. And so there's a lot of talk in the industry about the idea of a 1,000,000-mile battery for electric vehicles. Can we build lithium-ion cells or power vehicle for 1,000,000 miles? And really there's three critical components to the battery systems that are going to enable this type of performance: the anode, the cathode, and the electrolyte. And our team works on technology across the spectrum. Of course, our pure graphite anode material is our first commercial opportunity that's scaling now with contracts in place with customers. Our new technologies around cathode can lead to lower cost cathode materials. And we've been filing IP around some of our advanced electrolyte systems. And I'll show a bit of data about that at the end. But what I really want to kind of zoom in on in the couple minutes that we have is the pure graphite business. So if you look at the next slide, why are people interested in our material? And we won't go through everything here. I believe these slides will be available later for folks to look at. So the critical factors in a graphite material are their energy density, the cycle life, the cost, and the purity. And really what we're able to do is produce materials that are competitive with the best in class in the world at lower cost, and being able to do it outside of Asia, completely domestically sourced materials in the US, processed at our facility in Tennessee, and then being delivered to our customer either domestically or abroad. And really this demand is not about having a major breakthrough in performance gains. It's about incremental wins. The battery market's going to continue to grow and gain adoption by these steps forward in higher performance and lower cost. And that's where our material is really focused. And when you look at what this means in a performance standpoint, on the next slide, we really focus on long life materials like I talked about, and how can we support things like million-mile battery performance. And so we do all of our own testing and evaluation in full lithium-ion cell formats, cylindrical 18650 cells or pouch style cells that we build on our pilot line. We build compared to state-of-the-art materials that we source from leading vendors as part of our programs. You know, everything we do is about ensuring that we know where our product fits in the market. And so these are some charts showing the performance of cells built all head-to-head, except for the one labeled Tesla, which was taken from a Model S vehicle, and showing what we measure in our R&D throughput of coulombic efficiency, where cells that have a higher value, closer to 1, will have a longer cycle life. And really then in the long-term cycling performance, you can see our material compared to commercial synthetic graphite materials from the market, compared to a Tesla cell out of a vehicle, and compared to natural graphite sourced from leading players in China. And so, you know, you can see these look like maybe small benefits over the synthetic materials, but these can lead to much longer cycle life over the course of thousands of cycles, which are what these cells really need to support. So this type of data, the ability to build leading class materials outside of Asia, is really what sparked interest in our customer and potential additional customers. And so on the next slide is really looking at our current commercialization status, which is our agreement in place with Samsung to deliver them 500 tons of our synthetic graphite material starting in October of this year. And then along with that agreement, they signed an R&D collaboration because they saw the benefit to our research ecosystem, our ability to innovate in the material space, improve those performance through our testing technologies. And we're continuing to work with them on other programs. And then secondly, Sanyo, as I said, is a subsidiary of Panasonic, which builds their cells. After sampling our material from the pilot line, they've signed an MOU to further sample the production line materials and then move toward a contract negotiation after we can provide those materials in adequate time for testing. And so we hope to advance both of those relationships significantly over the course of this fiscal year that we've just entered. And so our roadmap for pure graphite, which is where a lot of our critical focus is on the next slide, which is the capital raise that Tim spoke about that we just completed about a month ago, really funds this phase 1 initial ramp. The next 2 years, scaling to 2,000 tons per year, delivering and hopefully expanding on the Samsung contract and bringing on new customers, all of this based out of our Chattanooga facility. The 2,000 ton per year run rate is really where the company becomes a healthy, strong EBIT company. And then on the back of those deliveries and the expansion, we hope to move into our phase 2 and phase 3 execution plans to scale to 25,000 tons or 100,000 tons over the course of this decade. And we'll do a lot of that financing on the back of contracts from hopefully folks like Samsung and Sanyo and through debt vehicles. And so this is really where we want to take this business. And in the growth of this market, you know, this is making us a major player, but, you know, let's say 10 to 15% market share in the space. And so our goal is to become, you know, a leader outside of Asia in delivering this high performance material. And earlier on, I talked about million-mile battery and the need for advanced materials in anode, cathode, and electrolyte. And I focus mostly on our anode business as this is our furthest commercial success. But in the last slide, what I want to show is kind of where this technology roadmap leads in terms of progress. And so if you flip forward, you'll see that the kind of current state of traditional NMC graphite cells, you know, can last hundreds of cycles, which when you look at what that translates to in equivalent driving miles, maybe it's 100,000 miles. You can build cells with these single crystal cathode materials, which you can go look at some of our announcements about, that can last over 500,000 miles. You build those with commercial materials and better electrolyte systems, and you can reach million-mile cell performance. But when you do things like switch to our anode material, this is where you see these huge gains And you can see, with these forecast lines that are just used to show some indication, we're going to be well above our 80% capacity retention out at the million-mile mark. And so this is really where our company is focused on driving performance to support these types of applications with lower cost. And so on the last slide, the conclusion really is what we've talked about. We're delivering battery materials focused on the EV and ESS market. We have core competencies across all areas of cell technology focused on lowering costs. We've demonstrated these technological advantages in performance, and we've brought customers to our first business, our pure graphite business. And we are the only company to have successfully done that from North America or Europe to sign a contract with one of the major cell manufacturers. And we hope to build things like our cathode technology into other commercial successes. And so we want to be a tier 1 supplier of materials in this rapidly growing space. And with that, I'll leave a few minutes for Q&A.
Great, Chris. Great presentation. We have an enormous audience online at the moment. A couple of technical questions. We've got some analysts online here, but one of the charts there, you show that battery materials demand could grow by 10 times in 2030, and the chart suggests a more moderate growth in lithium demand compared to the other materials that you showed, like aluminium, nickel, copper, etc. Can you talk to that in the context of what that means for your company?
So specifically in terms of the lithium growth relative to the other materials, sorry? Yeah, sure. So I think you can find a number of reports that will show this growth at a different stage in terms of whether they think it's going to be 10x by the end of the decade or even more. Our company is focused on the active materials. This chart was more focused on the raw metal materials. So we're focused on taking those raw materials and converting them into battery ready materials. And so, while you look at things like nickel specifically or cobalt specifically, we're focused more about the cathode final composition, which isn't explicitly outlined in this chart. And so in terms of the growth of those materials relative to lithium, I think it's that the fraction of them seems to be about right to me without kind of going through the numbers, more cleanly than that.
Sure. Okay. Thank you. Another question. The US Department of Energy has stated a goal for the industry to achieve an extreme fast charging battery by 2028. The aim is to have 80% battery capacity charged within 15 minutes. Fast charging of battery causes degradation of the battery life, yet the market is talking about the million-mile battery. Can you talk about those developments there? I know you did touch on them.
Sure, yeah. Fast charge is really an important area of focus right now. The two are not mutually exclusive, right? Reaching this million-mile cycle life performance as well as fast charge. But, whoever brought this question is correct that fast charging traditionally has, a negative impact on the cycle life. And actually, if you go through what Tesla talks about, being the first people to really deploy this type of work in scale, they say this, right? And so part of our programs and our product development programs are all focused on how can we achieve higher energy density, higher power density, and lower cost. My personal opinion is that longer term fast charging will not be as paramount as people think it is today, because right now it's serving as a safety net to people who have fear of range anxiety. And when people really start to get in electric vehicles and get out of their garage every morning with 500 kilometers of range and realize they don't drive 500 kilometers every day, I think you'll actually see the kind of need for fast charging for vehicles to not be as great as people say it is today. And of course, things like autonomy could drive that further. So there are some competing aspects there, but all of those are active programs in our product development pipeline.
Okay, great. And just the last question, we do have a lot more questions. We're going to follow this up with an article, but where do you want the company to be in 10 years' time?
Yeah, I think in 10 years' time, really our goal is to be a leading supplier of battery materials, with a focus outside of Asia and not just in the anode space. Like I talked mostly today about our pure graphite business, but we have opportunities now, especially with some great patented technology now in the cathode space, and our electrolyte programs, where we want to be seen as a diversified battery materials company that's supporting people make lower cost, higher performance batteries to move to, you know, a decarbonized society. That's really our goal.
Okay, great. Thank you, Chris, for your time. As I said, we've got an enormous interest in your company, and we'd like to follow up with some content further down the track.
Absolutely. Anytime, Tim. Thank you very much.
Thank you. Next up, we have X-Tech, code XTE, market cap of 44 million. The company is focused on the delivery of protection and sustainable solutions for the government, law enforcement, military, and commercial sectors. The stock has had a 1-year return of 82%. Company just raised $5.5 million not that long ago. We have with us the CEO and MD, Philippe Audoin. And just one reminder, if you do have a question, type it in. If you put your hand up, we can't help you. So thank you, Philip. Over to you.
Yes, good afternoon, ladies and gentlemen. Thank you very much, Tim. Just to show you what sort of products we're making in X-Tech, we basically have world-class soldier solutions. So we focus really on the frontline protector, either the military or the police or the first responders in general terms. We have two kinds of products. On one side, we have ballistic products, shields, and soft armor, hard armor, and helmets that protects against any type of bullet. We have another set of products that are derived from UAVs. We sell UAVs as well, but we sell a lot of applications, software applications that integrate the videos that you're getting from UAVs into tools that are necessary for the frontline soldier to be able to do its business. So going on to the next slide, the investment highlight is X-Tech is a company we've just announced $42 million revenue for this year 2020. We're very well positioned for growth. We focused on a market which is very strong worldwide at the present time. The defense market is growing in the West considerably in the last few years to about 2% of GDP, which was much lower than that before. We focused on solutions that are market leaders in there. So latest technology, if it is most of the time our technology from now on, we use a lot of other technologies, but our technology is becoming more and more prominent in what we sell. We've accelerated our ballistic solution strategy, which in particular with the acquisition of a company in the US. We've developed a lot of actionable intelligence solutions, taking data from small UAVs and getting that into the soldier. And we have a strong outlook. 2 years ago, we had $17 million turnover. We did 37 last year, and in the year which just finished, 42. So very, very strong growth, profitable in the last 3 years or 4 years. Next slide, please. So that gives you where we are at the present time. Share price in around 80 cents, but when this morning was actually 89, that was even better. About $40 million market cap, and a very strong growth in the last few months because we've announced a number of things in terms of the execution of our strategy that we'll go through in a few minutes. Our biggest shareholder is our chairman, that has about 10% of the shares, and otherwise about nearly 1,500 investors into the company. Next slide. As you can see, the defense sector is actually growing very fast. The US is by far the biggest, as you can see, 891 billion. Europe about 300 billion. Australia is only 39 billion, which is still nice. So that really shows that if you have a product that is worth its capacity worldwide, I mean, the US is the first country you should go to. Europe might be second, and Australia, of course, we look at after Australia, but it's a lot less important. Next slide. So what do you need to sort of be successful in any new product? I mean, here we've developed that technology. It's a process by which, instead of using a way to press these plates or these helmets, we use what is called an hydroclave, which is a product on which you put the product inside. You close it, inject a liquid, and pressurize at 300 bars. It gives you the same pressure across the plate. That's what gives you the very, very even production quality on one side and protection on the other, which makes a difference towards the rest of the competition. We propose products that are up to 30% lighter than other products on the market. So you can see that it is massively, massively better. When you know that a soldier can have 25 kilos on his back for a few hours and maybe 50 kilos on his back if he goes for a couple of days, 5 kilos of that is ballistic plates and helmets. So lightening his load is very, very important. That's why we have a lot of hope into that market that is worth several $1 billion a year. So, but having a process is great. You need products, and so we have developed a number of products, helmets as well as plates, and that we've presented to the market already. We've put together a manufacturing capability in Adelaide that we've opened up in February. We have actually bid in the international tenders. We've been successful in Finland on a major contract a couple of months ago that will be delivered before the end of the year. And of course, we've acquired a company in the US that is making armor products. They have their own range and they have their own factory, but of course they have all the distribution networks that are necessary to sort of be successful in the biggest market in the world. So the integration with them has gone very well in the last 9 months. They've been with us, and they contribute widely to our turnover as well as profit. It was an accretive acquisition, and the integration is going extremely well. So we have all the ingredients basically to go from a position of having a process that works to a complete line of which delivers products and generate profit for the company and for the shareholders. Next slide, please. So we've developed the product, the technology. We will open up the manufacturing. We've started with international sales. We're leveraging the US at the present time with this acquisition, and we target larger global orders, mainly in the West, of course. Next slide. So the other thing that we do in the company is related to UAVs. We do these small UAVs, 1.3 kilos. We have a $50 million contract with defense, and we do a lot of work in terms of support of these. There's another about $35 to $50 million worth of through life support that is secured by a contract, sole source contract with them for the next 5 to 7 years. Quite lucrative, which is very good. However, in terms of the applications that we have writing ourselves, we take a video feed from a UAV, and in a real time we sort of produce a georeference 3D mapping that you can compare with previous data, which allows you to have instant situational awareness and comparison with other pictures or videos that you may have had taken an hour ago, a day ago, a week ago. And that is absolutely critical to the soldier safety. So a lot of that has already been sold into the US market, into the Australian market, the New Zealand market, and we're looking at a number of other countries in Europe mainly. And we're sort of integrating this into armored vehicles and into larger products that actually monitor your situational awareness on the battlefield. It is also because it is photogrammetry, using photogrammetry, therefore very high accuracy, very positive in terms of cueing and targeting. Next slide. So we have other products that are coming as well. A small robot that you can throw that can actually measure the density of chemical and biological threats and position that on a map that we've produced with the previous document. The XCLAV technology allows us to do a very, very light material that is used more and more in the satellite business. As you know, the satellite business is booming, especially for small satellites. And we've recently sold a number of a contract to sort of with a company called Skycraft to a funding from the Australian Space Agency, which we have an MOU. Next slide. So in terms of the financial overlook, you can see we went in FY17 from 9 million to 1817 to 1937. 42 plus have been announced already for 2020. And we believe that in the medium term, the sort of products that we have and the size of the market and the sort of quality of what we can propose takes us into the medium term into about $100 million target revenue. So it's underpinned by the manufacturing capability on XCLAV, the US distribution and manufacturing base, the established global network for exports, the continued SUAS supply and maintenance, growth in actionable intelligence, and interest in advanced composite material, especially in the space industry. So we have a large investment that we've developed now, and we're in a very strong position to capture increasing revenue and gross margins, and further supported by a recent loan. We've actually secured a loan of 2.5 million with the Commonwealth Bank that is actually very good because it doesn't dilute our shareholders. But that also shows that banks are now giving us money, which is always good. We've been profitable in the last 3-4 years, so it's good, but we expect an acceleration of this in the not too distant future. Next slide. I think it's pretty much it. Okay, thank you very much.
Thank you for your time. A question around the lead time for a contract. Do you kind of expect things to ramp up quicker than the projected timeline?
Well, the timeline on contracts, government contracts, they tend to take quite some time to get there. It could be up to a couple of years, and that's what we've seen in Finland in particular. A lot of what we do with the US in particular and with HighCom acquisition there tends to be in the law enforcement, and it's actually it's nearly ex-stock, and it's very, very short lead time. So it means that the growth can happen very quickly.
And Australian Defence Force, is there any contracts there, and kind of what are you currently bidding on?
So the Australian Defence Force has got a long-term contract with someone else, and it's coming back for tender in the next 2.5 years. So we have a bit of time, so we're working on that. But for us, it's going to be it would be a small contract by any standard.
Right, and there's a question around here around revenue growth over the past 4 years. It's been impressive. Is that something you see developing in the future?
Very much so. I mean, the capacity that we have at the present time on the factory is about $40 million per year, which is coming online now. We can actually equip the second factory that we have in the US with the same machine, which has a capacity of another 40 million. So when we say that we're looking at being a $100 million company in the medium term, we'd have the capacity to sort of deliver that. With the technology that is up to 30% lighter than whatever exists, we think we can get there quite easily.
And is the plan for that revenue stream to be kind of an annuity style moving forward?
Sorry, I've got some noise around. What was your question?
Yeah, sorry. The question was around the revenue. Does it become like an annuity stream moving forward? The maintenance is very much an annuity on the long term. The others is it's distribution. In the US, you have 18,000 agencies that are police agencies that are buying regularly, and so they're very short-term things. They sort of buy and want delivery within 60 days. So that's a very that's a very recurring business, and you can rely on it very much. So it's not an annuity, but it's a constant business. Okay, great. Thank you for your time. Most appreciated. We had a very engaged audience, so thank you, Philippe.
Thank you very much, Tim.
And just as a reminder to everyone here, we will have a recording of all the webinars to follow up with all of you. Next up, we have DevEx. DevEx ASX code DEV with a market cap of around 37 million. We have with us the Managing Director, Brendan Bradley. The stock has returned over 150% over the last 12 months. The company is an exploration company with a diversified portfolio of high quality projects spanning Australia's most proven mining region. Key focus is in the exploration for major copper gold discoveries in the premier Lachlan Fold Belt, which we have spoken about a number of times in these webinars. Brendan, thank you for your time. Over to you.
Well, thank you, Tim, and thank you to everyone for attending and seeing what sort of projects that we're about to present. Moving on to the next slide, just before was our disclaimer containing also all of our ASX announcements, which you can read at your leisure on the ASX website and also on our own website. DevEx Resources, as Tim mentioned, is a mineral explorer focused on exploration discovery through the drill hole and through drilling of its projects, with a key focus on exploring for gold and copper in New South Wales in the Lachlan Fold Belt, and also in Western Australia, exploring for nickel, copper, platinum group elements in the West Australian region of the Julimar Intrusion Complex, which is a new discovery that's been happening this year. We're a junior mineral exploration company, and we are very much leveraged for discovery success through the drill hole. If you go to the next slide, I'll just explain. So as mentioned, we're a junior explorer. We've got a market capitalization of around $20 million, $27 million, and we recently completed a capital raise, which sees us with sufficient cash funds to commence and move forward into drilling exploration for the foreseeable future. Our major shareholder is our chairman, Tim Gorder, with at the moment about 19% of the company, and is supported by a strong board and a top 20 of mineral explorers and experienced explorers in that. If you move to the next slide. Thank you. So to explain the group and myself, I'm a geologist by trade. I've been in the business of exploration for over 25 years through generation, identification of opportunities, through to resource development and eventual underground mining of high-grade assets. Tim is known to many people, and Tim has had a fantastic year this year. He's very much a strong mineral exploration enthusiast. Those that know Tim knows that this year has been successful. He has been involved in establishing strong companies, including the likes of Liontown, Chalice Mines, and also Strike Energy, where his focus has been around building a group of successful mineral explorers around that are focused on building up these targets and progressing through drilling. Over in our New South Wales project is Chris Torrey, our chief geologist, and Chris is based in New South Wales and is currently actively exploring on our New South Wales projects. So if I move forward to showing you our general area where we're focused on in New South Wales within the Lachlan Fold Belt. The map you see on the left-hand side is the general lay of the land within the main area of the Macquarie Arc, where some of the Australia's biggest porphyry copper gold mines are located. So just for scale, down on the bottom right, you can see where Canberra is, and then to the north, you can see Parkes. The green rocks represent the right sort of Macquarie Arc rocks that you see in the region, and the red dots show you some of the major mines, including the world-class Cadia Ridgeway project, North Parkes, both porphyry copper gold deposits occurring at the same age, and quite spectacular. They're being mined by Newcrest and by China Moly. Our projects are located also down in the south. They're the orange outlines through there. We've been quietly and building up a portfolio of exploration projects 100% owned to DevEx, whereby we've been taking advantage of new information that's been coming out from the survey, where they've been finally mapping down this region and age dating the rocks, and they're finding porphyries down here of the same age as what you see at Cadia Ridgeway and Parkes. And that's really started a bit of a pegging rush down in there, and we've been able to peg the ground that we've got, and we're really excited about what we're doing. To take an example of that and drilling down into one of our projects at Basin Creek on the next slide, if you can move to the next slide, just showing you in the central part of our Basin Creek tenement, we've been building this exploration opportunity up for the last 3 months at the Main Ridge prospect. What you're seeing as a slide here is showing you the soil geochemistry for gold, and we're very much focused on gold exploration, which was what we're seeing at the surface. So we've sampled the soils, we're looking at the gold distribution in the soils, which we hope is representing the underlying rocks. Where we see rocks outcropping, we've been taking rock samples of those, and we're seeing quite a lot of +1 gram per tonne gold through this system. And what's outstanding to me and what I like about it is the scale. You can see there that we're seeing anomalies that are 1,000 metres long, 400 metres long, and 600 metres long. It's quite large scale for an exploration target that really hasn't seen any drilling since the mid-80s, and what drilling has been there has been minimal at best. What overall we're seeing here is a very large and extensive 4-kilometre long gold system with extensive alteration of the actual rocks that are there. So these are the targets that we're planning to start drilling in the coming weeks, and this is really what our focus is going to be, both at the Basin Creek, and if I can just drill down into the next slide, for example, in the north, where we've been rock chipping and also doing the soil geochemistry, you can see what the scale of the system looks like. It's 1,000 metres long. We're seeing rock chips up to 8 grams per tonne gold, and only 1 or 2 holes that were drilled back in the 80s with significant gold found nonetheless. So where the white dots show where we're planning to drill, and that's what we plan to do in the next few weeks. So, you know, we're very much focused on get the rig turning, and let's hope for some good results in that area. Moving to the northwest at our Junee project, close to Basin Creek, about 60 kilometres to the north in the Wagga area between Wagga and Gundagai. We've been building this project up for the last 2 years, ready for drilling, and again, that's what we plan to be doing next month. So if we just zoom in on the project on the next slide, to give you an example, what we're showing you on the right-hand side is generally airborne magnetics, where they look at the magnetic signature of the rock. The red outline to the north of our tenement is the Cobar monzonite, and that was recently age dated by the survey to be the same age and same chemistry as the Cadia and as the North Parkes porphyry copper deposit. So we're really excited about looking on our tenement, similar magnetic anomalies that are lying under cover and thin cover at best, and at Nangus Road, and also some of the other anomalies at Riversdale North and Billabong Creek, which when we zoom into this white box on the next slide, and if you can see on the right hand side that we're showing you these prospects with the magnetics. What we're seeing is, for example, at the Riversdale North prospect, is we've been on the ground, there's limited outcrop, but what outcrop we do see is we see significant alteration, and we're able to see copper on surface. We're able to rock chip results up to 1% copper. We're also seeing small gossamerous rocks, which are the oxidized version of what we believe to be sulfides. And those gossamerous rocks are high in gold, so we can see up to 2.8 grams per tonne gold and 0.4 copper. So we're seeing nice alteration. We're seeing, you know, the right sort of metals that we're chasing for. Nobody's drilled these prospects. Nobody's gone in with any deep drilling into these targets. And we've then subsequently this year come out with some ground geophysics, looking for the presence of copper sulfides at depth and looking for the presence of sulfides with something like IP geophysics, which is these lines that you see there. And coincidentally, we're seeing IP anomalies over these targets. So these figures here are just slices of the IP lines going out through these prospects. So the top of the slide here, you can see that, you know, where we're seeing alteration, where we're seeing scattered alteration through the area with copper and also some gold. When we did the IP, lo and behold, we're seeing an IP anomaly underneath. And so it's not rocket science. What we want to do is get the rig on there and start drilling. And that's what we're planning to do alongside and in tandem with what we're doing down at Basin Creek. We're going to go up and drill these porphyry copper gold targets up here, both at Riversdale North, Billabong Creek, and likewise at the Nangus Road prospect. So that's going to be our focus in the coming months, is getting that rig turning and hopefully hoping for some pretty good results. And that's really what our game is here. Moving to the next slide, stepping out in scale and moving over to the west in the what we're now calling the Julimar Complex region. Just zooming in on the next slide, just showing you again magnetics for the region and the general layout, just northeast of Perth. This has really started a strong pegging rush in this region following earlier this year's discovery by Chalice Gold Mines at the Julimar nickel copper PG deposit located, and you can see it on the diagram there, a nice magnetic anomaly there. You know, their drill holes, which you can go to their website, has found some really outstanding grades of palladium and nickel and associated copper. And so we've pegged the grounds, and we've got applications to the south, several applications to the south, and also to the north, where we've got a 100% owned application. And recently we've done an earn-in deal with the Bauxite Explorer, ASQ, Australian Silicate Quartz Group. And the beauty of that ground to the north, which is the one I like, it's located between Chalice's discovery and another nickel copper PG prospect being explored by Cassini Resources to the north. And we're very much focused in our tenement to the north there on those magnetic complex anomalies that are there. And fortunately, with the earn-in deal that's been done, ASQ's done a lot of the hard work. And if you go to the next slide, their license is granted. That's what we like about it. They've already done the hard work with getting land access agreements in place. And so that gives us the ability to get on the ground now, which is what we're doing. We're looking at the region where there's a lot of surface bauxite around and over the top of those magnetic anomalies. ASQ have previously carried out vacuum drilling targeting surface bauxite, and so there's shallow holes, but we've got access to their samples, and we're currently analysing those samples, you know, in the hope to see what's underlying the bauxite and over the top of these magnetic anomalies, which is our primary target. So we're very much early days. This region has not seen any real exploration for this style of deposit, and it's really Cassini and Chalice that have been, with the discoveries that happened with Chalice, it's really sort of urged this area for a new look. And so we're really excited about exploring this really virgin ground. So watch this space, and we're just building these targets up as we go over the next few months. So just in summary and wrapping it all up, we're very much focused in New South Wales and the Lachlan Fold Belt. There's been a lot of success in the last 18 months in the Lachlan Fold Belt with discoveries like Alkane's Boda deposit to the north of us. And overall, that leads into quite a lot of exploration in the region. We've been focused on defining drill targets, and both for gold, surface gold mineralization with what you see at Basin Creek, and that's what we're going to kick off with a drill rig in the coming weeks, and also some significant scale porphyry copper gold targets at the Junee project to the northwest, and likewise in tandem we'll plan to be drilling that at around about the same time. And meanwhile, we're advancing and we're on the ground exploring in the Sovereign Nickel Copper PG project north of Chalice's recent discovery. All right, and that's just a general timeline, but as mentioned, we're really focused on the drilling. So that's going to kick off in the next couple of weeks, and we're looking forward to seeing what results we get from drilling those projects. All right, thanks very much.
Thanks, Brendan. A couple of questions. One in regards to, you know, being a junior explorer, the funding markets can kind of go from feast to famine. How have you found support from the capital markets at the moment? And is it kind of commodity specific?
Look, there's a lot of interest out there for gold explorers, and you know, gold explorers with quality targets that they're going to be drilling. So, you know, people have seen success in the recent sort of 6 months, and there seems to be a lot of support for that. And likewise with the new discovery in the west for the nickel copper PGs at Chalice, likewise there's quite a lot of people very interested in the fact that it's very fresh ground and the opportunities are really there for discovery. And so as we're a junior explorer with a market cap of around $25 to $27 million, we're very much leveraged towards how our drill holes result and what happens with our drilling. So the support out there is quite strong, and the interest is very strong, and we've found that with our capital raise.
And do you find that you get some interest from the bigger companies to invest alongside you or invest in you?
there's a lot of interest in the New South Wales region, and you know we've been talking with some of the major companies in the region. Their interest is there. At the moment, what we're doing is building up that we're doing what we can do, and we're building up those targets for drilling, and that's what we want to do ourselves. So, you know, we're 100% owned on these projects, and we can continue to explore in this space. And especially a project like Main Ridge, where if we're making a discovery on Main Ridge, for example, which is gold at surface, moving that forward is really within our scope, and that's what we're looking to do. We welcome the majors' interest, and we're certainly happy to chat and talk about it. But right now, these are quality targets that we want to drill ourselves.
And the Lachlan Fold Belt is, you know, very well known. It's, you've got a footprint there. How did you end up with that footprint, given you're surrounded by some of the bigger companies?
We were following what the Geological Survey were doing down there when they started mapping in 2017, and they released their results late 2017. When we became aware of those results very, very quickly, we immediately started pegging ground in that region. You know, the age of those porphyries down there are not as common as you think, and to find an age of a right chemistry, the right age of the porphyry to Cadia and Parkes really sparked us off, and that's what we went going. And of course, as you get ground and as you become more focused, we've been able to build up that portfolio of over 600 square kilometres, and that's really drawn us into Main Ridge, which is, you know, spectacular. I've been exploring Southeast Asia for over 8 years with my previous employer, looking for those sort of targets, and lo and behold, I come back to Australia and I can find them right in the back door of New South Wales, in country New South Wales. So we'll see where we go with the drilling.
Great, Brendan. Thanks for your time, and good luck out there.
All right, thanks very much, Tim.
Okay, next up we have Little Green Pharma, who have been with us before. They are one of Australia's first locally grown medical cannabis producers. The stock has a code of LGP with a market cap of around 50 million. We have presenting with us today Fleta Solomon, who's both Managing Director and CEO. Seems to be a lot of interest in this space at the moment. The company recently announced a permit granted for an expanded facility. And they also announced back at the end of June a strategic shipment exported to the UK. So Fleta, thank you again for your time. Nice to see you. I know it's quite early in Zurich, I believe. So I'll pass over to you now. Thank you.
Thank you, Tim, and hello everybody. Good morning and good afternoon. Welcome to the Little Green Pharma Share Cafe webinar. Thank you for joining today. My name is Fleta. I'm the Managing Director at LGP, and I'll go through this slide deck and at the end have some time for some Q&A. If you can see the room behind me or my background, this is one of our newly expanded growing rooms, which we've just been permitted to start growing in. So super exciting for the LGP team, as it's 10 times the size of what we were growing in. So we can't wait to see when in the next lot of amazing medicines come out of these rooms. So very exciting. Okay, so let's start. So on the corporate overview slide, what I'm wanting to highlight to you here is that Angus and I, both executive directors, own 19% of the company between us. And the reason I want to make you aware of this is that we think like shareholders. We are completely aligned with your interests, and we're so super motivated to make this company work and achieve what we said we were going to do. It's also important to note that the company has no debt. We have a net cash position, 4.3 million. The balance sheet is strong, and the market cap is approaching around the 50 million mark. And of course, we're growing. As some of you might be aware, we're a vertically integrated medicinal cannabis company. And this means we have our own cultivation and manufacturing facility. So we're focused on pharmaceutical grade cannabis only, and this is used for treating medical conditions. And it's really fundamental because we're all about transforming people's lives. If we go on to the next slide, you know, this is our belief, it's our purpose, it's our strategy, it's who we are, and it's what we stand for. And it's important because we're delivering much needed medicines to patients across the globe right now, including those suffering from conditions such as pain, seizures, anxiety, and those undergoing cancer-related treatments. But we're also working behind the scenes on a unique drug delivery system. And this is to help solve real patient problems and will also help LGP to be a differentiator in the industry. So we absolutely want to deliver a return for our investors, but we also really want to deliver actual patient outcomes. Cool, next slide. And this is how we're going to do it. We are vertically integrated, so this means we operate across the entire supply chain. So this is incredibly important as we can identify opportunities and create value within. So this is what I mean. We have an indoor cultivation and production facility. So we grow our own plants in the southwest region of Western Australia, and that can produce 110,000 bottles per annum. But we're not limited to this. We have established channels of third-party raw material to supplement volume. And we also have the ability to expand our cultivation footprint even further and actually double our production output if necessary. So this gives us, or gives the company options, and I think that's really important. But we're not just growers, we also manufacture as well. So we have an exclusive agreement with a TGA GMP manufacturer. Now this stands for Good Manufacturing Practice, and it's a certification obtained from the Australian Therapeutic Goods Administration. And it's really important as it's a prerequisite to sell into many countries such as Germany. However, we're also constructing our own manufacturing facility, which is nearing completion and already licensed by the Federal Office of Drug Control. And that will allow us to have additional control and drive margins further and dry flower in GMP conditions to enter the German market. So what lies ahead of the business, or what lies at our heart of the business, is product innovation and the R&D team who are tirelessly working on and developing drug delivery methods for our patients. So in particular, we've partnered with Curtin University to develop a medicinal cannabis formulation. And this is using a RISE technology, which in essence will aim to provide, it's a slow release mechanism to benefit certain patients. So for example, such as those suffering from chronic pain. We also have an education platform and engagement team, and they're responsible for educating and nurturing doctors and other stakeholders, as we recognise that this is still a nascent industry and education is absolutely paramount, not only just in Australia, but overseas as well. Finally, on this slide, I can't stress enough how important distribution is, particularly in the international markets. Although we have sales, domestic sales in Australia to help pay the bills, ultimately we want to sell volume export into international markets, and we're a long way ahead of the curve here. We've been through regulatory approvals, we have signed sales, distribution and also consignment agreements in multiple countries such as the UK, Germany, New Zealand, Canada. And in fact, distribution and sales overseas is so important to us that I'm currently living in Europe now. And this is to progress this. And as the managing director, that's where I'm focusing all my efforts on. So look out for announcements on how we're making solid progress on volume sales into Europe and other overseas markets, because this really is the prize here. Everything that we're doing in the 4 steps beforehand is to enable us to create value in this 5th step. So this is ultimately where the value lies, and everything mentioned previously is an enabler to allow us to get there. Next slide, please. So LGP continues to redefine the medicinal cannabis industry. We were the first company to produce locally grown medicines in Australia and then export them. We had almost 2 years of first mover advantage. So we've been generating revenue since August 2018 now. I do want to highlight on this slide the significance of having finished TGA GMP cannabis medicines. And remember, this is good manufacturing practice. And it's recognised by the European Union. This is fundamental for pharma grade quality and those companies aspiring to or wanting to deliver into other markets. Because not everyone can do this, and it's a prerequisite to sell into countries such as Germany. And in fact, there's actually only a handful of companies across the globe right now that has this capability to deliver into Germany. And Little Green Pharma is one of them. So it puts us in a really excellent position as we enter new markets. We've always been proud of having a lean business model. We have fiscal discipline of not overcapitalizing until the supply pathways have been not only developed, but actually proven. And that's an important part for us. So we have a good net cash position. We don't plan to keep coming back to the markets because we're operating well within our means. And that's thanks to the local domestic sales we have. Okay, next. So our way forward and the reasons why these are our focal strategy points, it's really clear. Firstly, the proven sales in Australia. So increasing sales domestically demonstrates market validity. As I've mentioned, it generates immediate cash flow and really underpins the development of international pathways, allowing us to pursue the bigger prize. And the bigger prize here, or our primary target, is the generation of commercial sales volumes into international markets. So this is where we aim to make profits, and hence why distribution partnerships and those strategic shipments are really important, as it's proving out those international pathways. As Tim mentioned, we've already shipped more than 1,000 bottles to Astral Health in the UK recently, and we're soon expecting to export more than 2,000 bottles to one of our German partners, CC Pharma, in Germany. And although these volumes themselves are not materially commercial, they're strategically very important. So this is what I want you to understand. It's the ultimate goal for LGP is the commercial sales volumes overseas. And I don't want to leave any ambiguity here as to what we're trying to achieve. So look out for these real value drivers. Number 3, our end game and our longer term play is product innovation and unique drug delivery. I've mentioned that our strategic decision is to focus on pharma grade medicines, and that's for real patients with real medical problems. So our innovation efforts, such as the Arise technology that we're working on, will allow LGP to have differentiation in the market, but also to have better products and solve real patient problems that really do exist today. Okay, next slide. I mentioned just previously that we've been selling into the Australian market, and I want to give you a sense of that on this slide because it's been growing rapidly. You can see our continued sales growth, which is consistently strong with a month-on-month increase. So we're really penetrating the market, demonstrating not only demand, but we're also cementing the role that medicinal cannabis has to play in the medical field. So we've sold now more than 16,500 bottles in Australia, and 6,000 of these were just in the last quarter gone. So this is a 50% increase on last quarter. Frankly, we're probably never going to make a massive fortune from Australian sales alone, but it does demonstrate market validity and shows real world adoption growing at an exponential rate. And this pattern is highly likely to occur in other parts of the world, and it's what we're starting to see. Saying that, we generated 875,000 in revenue this quarter, with the gross margin currently sitting around 54%. Which we're expecting to improve with our ongoing internal capabilities. Our patient numbers increased by 24% in the quarter. This is well above the 14% increase in Australian patient SASB approvals, so we're looking really good here. We've now got 4,500 patients, of which nearly 1,500 are new. So the next slide, we know now that we're selling into Europe and that the other markets are the primary target for LGP. So in our view, we need to have raw materials and manufacturing capability, which we now have in place. So with raw materials or cannabis biomass, we have our own cultivation facility. So that's has the production of up to 110,000 bottles. We have optional capacity to increase our cultivation footprint if necessary, so we can double that. And we've also have established those channels of third-party raw material to supplement volume. So we're not limited by that 110,000 bottle capacity. With our manufacturing capability, we have volume manufacturing with a third party who is a TGA GMP licensed. So we own the equipment there, we own the IP, and we actually have our own staff working from this facility. We have a fabulous relationship with our manufacturer who does the finished oils. But we also have the construction underway of our own facility, which is nearing completion and already licensed by the Office of Drug Control. So finally, what is going to drive value? So just moving on to the next slide. So what is going to drive value for the company and the sorts of things you need to look out for? Along the lines of delivering medicines into Germany and the UK and South America, progress on our manufacturing facility and the construction, and also studies and education that promote awareness to doctors and stakeholders. So it's these types of announcements coming that demonstrate solid progress to achieve our ultimate goal, which is commercial sales volumes in other markets and the capacity to meet that volume. So it's, that's really the end. It's incredibly humbling to receive patient feedback about how we've not only changed their life for the better, but how we've also impacted positively on their families. So in closing, the team at LGP is so passionate and so dedicated to this cause. And we just can't wait to see how many more lives we can continue to transform, thanks to our loyal and supportive investor base that we have. So thank you, everyone. I really appreciate the time you've taken to join me today. I'll hand back to Tim and see if there's any questions. Thank you.
Thanks, Felicia. Yes, we have a couple of questions. Appreciate that it is 5 a.m. over there, I believe, in Zurich. So we understand your passion for your company. There's a question around Germany. Why the focus on the German market and the margins in Australia are, 53%, I think you said. Are the margins similar offshore?
Thank you. Germany is a very lucrative market. It's a very popular market that cannabis companies are targeting, Tim. And the reason being, look, Germany is a little bit more proactive. Not only are there more than 250,000 patients or applications or approvals that have occurred, but it's also reimbursed on their public and private health insurance system, a bit like our PBS. So it's a huge head start. When we deliver our medicines into Germany, we do it at a much higher price. So we do it at €1. So interesting with that 54% margin, we're expecting that to increase quite a bit because most of our sales in the future will predominantly come from international markets where the prices are much higher. So we're able to do that. So, and we also know that in Germany, it's very strict. It's a very complex country to deliver into. There aren't many companies across the globe that can actually do it because of the requirements to have this GMP, which I was telling you about, and it needs to be EU compliant. And there's literally only a handful of companies across the globe, including us, that can do that and deliver into Germany.
A question around your manufacturing facility. Can you outline the benefits of this strategy and particularly the impact on production costs and operating margins?
Yeah, sure. So we decided to go internally to have our own manufacturing capability, but it's really for GMP drying of flower. So the existing relationship that we have with our manufacturer, which is amazing, is really more for oils and finished medicines and R&D and our new innovative solutions that we're coming up with. But what we wanted to do internally at our own facility is have the capability to extract our oils to decarboxylate, because that's where we can drive margins further and send that product to our manufacturing for end finishing. And for us to be able to deliver into the German market, you have to dry under GMP conditions. And, like I say, you can't do that if you're growing outdoors. You can't grow it, if you're doing it in greenhouses, unless you have an indoor drying facility. So that's a really important part to our business plan as we move forward and we enter into the German and other European and even other international markets that require that level of quality.
And talking of quality, there's the question here, how does the quality of the product compare to kind of international products and your competitors?
Wow, really interesting question. Look, the TGO 93, it's the standard that's set by the Australian government for producing, not only growing, but producing and manufacturing medicinal cannabis, is so strict. The testing regime, it is so rigorous that the quality of coming out of the Australian product is second to none. It is so high up here that's why we are allowed, we have a mutual recognition agreement with the European Union that allows Australian product to enter into the market. Now, unfortunately, our understanding is that many imported products that come into Australia do not have to go through the same rigorous testing that Australian producers do. But fortunately, our TGA, so the Therapeutic Goods Administration, is coming down on this, and they are starting to test products coming in, because often what they say on the label on the bottle is not what's actually inside. And that's the issue that we're having with many imported products. Not all of it, but some. So we're hoping that the TGA will sort that out, and that everybody getting any medicine, whether it's locally grown or imported, will have the highest quality.
Great. Thank you for your time, Fleta. It's obviously going to be a long day for you over there, given you've been up so early. But thanks for your time, and I'm sure we'll see you again.
Not at all. Thanks very much, Tim, and everyone for joining.
Okay, great. Thank you. That's all we have time for today. If you've missed any of these presentations, they'll all be recorded. We've got an article coming on Novonix. That should be out on Share Cafe next week. We will send out copies of all the presentations to all of those who've registered. So thanks for your time, and see you next week.